We don't compromise when it comes to your access to care. Because you deserve complete protection, not compromises. Follow Enrichwise for more such insights. Are you looking for smart ways to save taxes while staying completely within the legal framework? One often overlooked and yet highly effective method is by forming a HUF or Hindu Undivided Family. In this video, we'll explore what an HUF is and how to form one, its benefits and drawbacks, and a real-world example demonstrating significant tax savings of forming an HUF. So what is an HUF? A Hindu Undivided Family, HUF, is a unique entity recognized under Indian law. It represents a family unit holding its assets and income, and it is taxed separately from its individual members. What are some of the key features? First, let's discuss who can form an HUF. So, individuals from Hindus, Sikhs, Jains and Buddhists, these communities can form an HUF. Who is a Karta? The senior most member, traditionally the eldest male member, manages the HUF. Now, who are members? Members includes all family members like sons, daughters, spouse, etc. Who are co-partners? A subset of members who acquire the right to family property by birth, both male and female descendants. What is the key advantage of an HUF? It has a separate PAN. An HUF has its own PAN number and files its own tax return. This is the key feature of an HUF. This PAN enables the HUF to apply for deduction. So it is eligible for deductions. HUFs also enjoy the same tax slabs and deductions like individuals. However, one advises that always you should consult a tax expert early to ensure maximum savings and smooth settlement. Let's discuss the residential status of an HUF. So how do you define the residential status of a HUF? The tax residency of an HUF depends on where its affairs are controlled and managed. Now, what is a resident HUF? If the control is wholly or partially in India, it becomes a resident HUF. What is a non-resident HUF? If the control and management are entirely outside India, it becomes a non-resident HUF. So let's discuss what is the criteria or the minimum requirement for the constituents of the HUF. Okay, so at least two members are required to form an HUF. What is the difference between co-partners and members? Okay, co-partners have the right to demand partition, whereas members like daughter-in-law do not have partition right, but they form part of it. A very important feature is that the new family members by birth or marriage automatically become part of HUF and they have equal rights. Now let us discuss how do you form an HUF. So first step is you need to draft a legal deed. You need to mention the names of Karta, co-partners, members and nature of HUF business. Step 2 is to obtain a separate PAN number. You need to apply for a PAN card in the name of HUF. Step 3 is, once you get the PAN, you need to open a bank account. Create a bank account exclusively for HUF transactions. Tax implication of an HUF. Now, HUF is a separate taxable entity. Income earned by the HUF is taxed separately. Deductions and exemptions, HUF enjoys the benefit of tax deductions under sections like ATC, ATD, etc. independently. An HUF is treated as a separate entity under tax laws with its own basic exemption of 4 lakhs. Suppose your HUF earns 2 lakhs from fixed deposit, 1.9 lakhs from rent and 1.25 lakhs from long-term capital gains. Since gains up to 1.25 lakhs are exempt, your total taxable income comes to 3.9 lakhs, below the basic exemption limit. The result, zero tax payable. Individually, you would have had paid 1.2 lakhs in tax. HUF, can it pay salaries to its members? Yes, if members help in managing HUF affairs, a reasonable salary can be paid to them, deductible from HUF income also. Can HUF make investments? Yes, HUF can invest in stocks, real estate, FDs, mutual funds. Income generated from these investments is taxed in the hands of HUF. What are the drawbacks of forming an HUF? See, while an HUF offers tax benefits, it comes with some drawbacks. The first is equal rights of all members. Every member, including new ones, automatically gets equal rights to HUF property. This can complicate property. Point number 2, difficulty in resolution. To dissolve an HUF, it's not so easy. All members must agree to a partition, a complex and lengthy process. The third is continuous compliance. While once an HUF is formed, annual tax returns must be filed until a legal partition is. And fourth is, in case of family disputes, managing joint ownership and decision making can lead to further disputes. So, in conclusion, what do we learn from this? Forming an HUF can be a very powerful tool for saving taxes legally and efficiently. However, it's essential to weigh the benefits against potential complications like property rights and future family plans. Always consult a tax expert before proceeding to ensure that forming an HUF fits into your long-term financial and family planning.